Yes. See now we need to discuss about valuation of shares. First thing, before going into this chapter, we need to know what is shares. So, what is shares? Can you tell me what is share? Anyone? What do you mean by share? Whether share and share capital is one and the same, whether share and share capital is one and the same, or whether it is different. Which one is a broader concept? Whether share is a broader concept or share capital is a broader concept? Can you tell me now? Which is a broader concept? See, share is a part of share capital. Share is a part of share capital. So share capital is a broader concept than the share, isn't it? Then types of shares you know, that is equity shares, preference shares. Equity shares are also known as ordinary shares or rights shares. Then preference shares. Preference shares are also known as rentier capital. Those are the basic two types of shares, equity and preference. So now the question comes, why valuation of share is necessary? Why valuation of share is needed? What is the reason of doing valuation? So why it is needed? Valuation of share. So what is the general concept? General concept now we need to see is usually shares are listed in stock exchange. So now there are two types of stock exchange. So one is Bombay Stock Exchange BSE, then NSE National Stock Exchange. So now what happens? Shares, top 30 company or top 100 company shares are listed in stock exchange. Whenever the shares are listed in stock exchange, share price will be available to all the people, isn't it? Those who deal in stock market, all the share price regarding the particular company is available. Then it is subject to market fluctuation. So what do you mean by market fluctuation? So there may be a rise in the share price or there may be a fall in the share price. So fluctuation may be because of speculative activities, because of insider trading in stock market. So what do you mean by insider trading? Insider trading means, so one person gets information of the company, gets information of the company illegally. That is, that person goes to the company and he will catch one member and he will get all the information about future activities of the company. Now he knows about the future activities of the company. Now what happens? He can easily speculate and deal in stock exchange. So that is the meaning. So now not all the shares are listed in stock exchange. You know, public company shares, it is necessary that public company shares must be listed in stock exchange. But what about private company shares? Private company shares, there is no such provisions. So whenever the shares are not listed in stock exchange, what happens? Then there is a need for valuation of share. So in valuation of share, there are basically three methods of valuation of share that is there in our syllabus and which is important from the point of view of examination. So what are those three methods? One is net asset method. One is net asset method. Then second is market value method. Then third one is fair value method. Net asset method, market value method, and fair value method. So, before solving the problem, it is very important that you should know the formulas and what are the format, how you are going to solve the problem. That is also very important. Yes. So now we need to discuss the meaning now. See this valuation of share. Why valuation of share is needed? If the shares are quoted in stock exchange, then it will help in ascertaining the value based by the buyer and seller. But not all the shares are quoted in stock exchange. So there are two types of quotation is there. That is also direct quotation, indirect quotation. So that is all not important from the point of view of this syllabus. So now the need for valuation of shares arises in the following circumstances. So these are the several circumstances under which you have to value the company's share. So now there are two provisions. When and all you can value company share, either during the company's process, that is what do you mean by that? When the company is a going concern, then you can value the share, or else after the winding up of the company or after the liquidation of the company, you can wind up the you can value the share. How you are going to value the share after winding up of the company? That we need to see. How you are going to value the share after winding up of the company? Anyone? Can you tell me how you are going to value the share after winding up? That means all the activities of the companies are closed. Then what happens? Then one person is appointed to carry out, to value the assets of the company, to value the liabilities of the company, then all the realizable value is calculated of the asset and all the values of the liabilities is calculated and liabilities are paid off. Liabilities are paid off and assets are sold. So this is a process. This is a process. So now first case we need to see, in the case of amalgamation for determining the rights of the shareholder and formulating amalgamation scheme. So there is separate concept known as amalgamation. So what do you mean by amalgamation? Amalgamation is nothing but combining together or merging together. Hero Honda. Hero Honda, see these two different company. Hero is one company, Honda, Maruti, Suzuki. Together, Maruti is one company, Suzuki is another company. They combine together and form one company known as Maruti Suzuki. Similarly, Hero is one company, Honda is one company. They combine together and formed one company. So Maruti is an Indian company, Suzuki is a foreign company. So they amalgamated into one company. So that is known as amalgamation. So separate. This concept is there in the next sem. Next sem, amalgamation. So amalgamation, in short, you can say it is merging. It is merging together. So similarly, now you have seen various banks have merged together. So that is also the case of amalgamation. So amalgamation, what and all types of amalgamations are there, that we need to see. So amalgamations in the nature of purchase and amalgamation in the nature of merger. So for merger, there are various conditions are specified. If all the conditions are satisfied, then it is amalgamation in the nature of merger. If any one of the condition, if company fails to satisfy, then it is amalgamation in the nature of purchase. Similarly, there is external reconstruction. Similarly, there is internal reconstruction. So various things are there. So that and all not important as of now. So now we are going to discuss, see this, why amalgamation valuation of share is needed, because now one new company is formed. Whenever the new company is formed, old company's balance sheet are combined together and one new consolidated or revised balance sheet is done. That is why valuation of share is needed. Why valuation of share is needed? Because there may be a different types of share capital, equity share capital, preference share capital. It may be either partly paid up share capital, it is or it may be a fully paid up share capital. So and again, these capital may affect if someone is not ready to pay the amount. Suppose the shareholders are not ready to pay the call money. In that case also, suppose the shareholders are not traceable. In these case, valuation of shares become necessary. That is first one. So now second one, for determining the price to be paid to the dissentient shareholder for purchasing their shares in the case of sale of a company. So now what do you mean by dissentient shareholder? Can you tell me now? Anyone? Meaning of dissentient shareholder. What is that? Dissentient shareholder means. Anyone? Can you comment in the chat box? What do you mean by dissentient shareholder? Or unmute yourself and answer if you know. Dissentient means not satisfied. Dissentient means disagreed. disagreed or not satisfied shareholder. So in the company there are n number of people, isn't it? So what happens? Some of them may not agree with the terms and conditions of the company. Such shareholders are known as a dissentient shareholder. In the case of dissentient shareholder, we have to convince them. We have to convince them means what? Company have to convince such a shareholder. So for convincing purpose, that means as per company's terms and condition or as per their terms and condition, we need to value the share because we need to allot the share to such a shareholder. So that is one more thing. That is why valuation of stock is needed in the case of dissenting shareholder. Third one, for the purchase or sale of a block of share. So suppose you are willing to purchase one shares of the company. Suppose ACC Limited. ACC Limited share, one share value is worth 1500. So now you want to purchase 100 shares. So now shares are given only in a lot. So now let us say the lot is 100 share lot. That means you cannot purchase fractional shares. Fractional shares means 75 shares you cannot purchase, 85 shares you cannot purchase. Only 100 multiples of 100 only shares are given. That means you can purchase only 100 shares, 200 shares, 300 shares like that. So for that purpose also, for determining the valuation of share is needed. That is third one. Conversion of one class of share into another. Yes, again valuation is important. Why? Because if you are converting your equity shares into preference share, or if you are converting your preference shares into equity share, your paid up value will be different. Of course, your paid up value will be different. So that is why valuation of share is needed. Then compensating the shareholder on the acquisition of their share. So what do you mean by acquisition? Acquisition means what? So acquisition means here we are talking in terms of government nationalizations. So whenever there is a nationalization, whenever there is a merger, whenever there is a takeover, in that case what happens? Shares are acquired. Either shares are acquired by the company or either shares are acquired by the financial institutions or either shares are acquired by the government. So in all those cases, again we need to revalue our share. Why? Because closing books of account means previous year balance of the share and now present year balance of the share may not be one and the same because it may be different. Previous year share value may be different, this year share value may be different, and if you put the shares in the stock exchange, you know that it is, of course it is different. Every day it changes value. If you see Sensex index, if you see, then every day there is a fluctuation. So how fluctuation comes due to suppose there is an economic crisis. Now this is a recession period. So now when there is economic crisis, automatically now gold prices are increasing. Why? Because of the crisis, because of COVID-19, novel coronavirus. So now various things are there. Yes. Now next one. For fixing the margin on security, when the loans are raised on the security of the shares of a company. Suppose company may not have sufficient fund for their day-to-day activities. In that case, company may opt for a last resort. So what is a last resort? Company may keep their shares as security and company may acquire money from financial institution. In that case also valuation of share is needed. So how much money to give to the company, for all that purpose valuation is needed. Last one, for taxation purpose. See this, for estate duty, wealth tax, gift tax. So whenever you need to calculate the tax or whenever you want to charge the tax, again you need to value the shares of the company. So these are the 7 points mentioned for need for valuation of share. Sometimes even theory question comes for 6 marks. Theory question comes for 6 marks, then you need to explain in your own words all these points. So whether this is clear about valuation of share, why valuation is done, Any doubt regarding the valuation of shares? Anything you want to ask regarding this one? Yes, if you are clear with the meaning itself, if you are clear with the meaning, then we can move on to the methods of valuation. Next, very important is methods of valuation, because practical question comes from methods of valuation of shares. So now we need to discuss one by one what are the methods available for us. So now you see methods of valuation of share, very important. First one, intrinsic value method. Intrinsic value method is also known as net asset method, or it is also known as asset backing method, or it is also known as breakup value method. So what do you mean by intrinsic value or net asset? Can you tell me what do you mean by net asset? What do you mean by the word net? What do you mean by the word net? Yes. Anyone? What do you mean by the word net asset, or what do you mean by the word net? Net. Net means what now? Anyone? Can you answer? What do you mean by the word net? See, net means after all the deduction. Very simple. Net means after all the deduction. So in this case, what we are concerned about, in this case, we are concerned about asset and liabilities. Very important. In this case, we are concerned about asset and liability. So asset, how we are going to write the asset in the books of account when we are valuing the share? Assets are written at their market value or at their agreed value. So what do you mean by market value? So very simple, net asset method is calculated on the presumption that company is wound up. Very simple. That means company is closed. Then only you can calculate net asset method. Before that, you cannot calculate net asset method. So now we will assume that in the question company stopped its all the operation. Then what happens? Then you need to value your asset. Why you need to value your asset? To pay the liabilities or to pay the external liabilities. Who are those external liabilities? There may be a creditor. Creditor, isn't it? So creditor is a person who has given the money to the company. So company is going to pay the money after the winding up. If company is not able to pay the money before the winding up, then of course when the company stops its operation, automatically what happens? Company need to pay the money to the creditor. So how company will pay the money? They will value their asset, whatever the remaining asset at the end of the period or at the end of the expiry, they will value their asset. How to value the asset? There may be one person called liquidator. Liquidator will do that all valuation process. Okay. So now I told net asset we need to write at market value. Market value means I will tell you in the balance sheet, land and building is given as 4 lakh. In the balance sheet of the previous year, land and building is given as 4 lakh. Now, when we revalued the building, of course, there is an appreciation in the land and building. What do you mean by appreciation in the land and building? Now, the land and building value is more. Now, let us say 7 lakh. So now you are going to write 7 lakh and not the old amount. Why? Because we need to write present value, or we need to write market value, or we need to write agreed value. So very important. Suppose nothing is mentioned in the problem. Suppose nothing is mentioned in the problem about the agreed value. So in that case, what you are going to do? In that case, we'll assume that book value itself is the market value. Book value means whatever the given in the question, that itself is the market value if nothing is given in the problem. Yes. So now we need to discuss this first method, intrinsic value method. Under this method, value of share is ascertained on the basis of net assets of the company. So net asset, here the term asset means what? It includes goodwill and non-trading asset. So what do you mean by goodwill? You know it is a reputation for the company. So goodwill, whether it is a tangible asset or intangible asset, you know, right? What is that goodwill? Whether it is a tangible asset or intangible asset. Goodwill. Yes, goodwill is an intangible asset. Correct. So here doesn't matter whether the assets are tangible, doesn't matter whether the assets are intangible, doesn't matter. You are going to write this asset when you are calculating net asset method or intrinsic value method. That is one thing. Now, next thing comes about trading asset. What do you mean by trading asset? Trading assets are those assets which are required for day-to-day activities of the company, and non-trading assets are those assets which are not required. So, can you give one example of a non-trading asset? Anyone? Non-trading asset, can you give one example? Anyone, can you give me the example for non-trading asset? What do you mean by non-trading asset? Any example you can give. So now I will ask you whether investment is a non-trading asset. Can you tell me now? Whether it is a non-trading asset or not? Yes or no? Investment. Whether it is a non-trading asset, investment in security, investment in government bond. Yes, it is a non-trading asset. Correct answer. Nishant is saying correct. Why? Because here company is investing the money in outside security or external security. See this. Either company is going to invest the money in other company, or either company is going to invest the money in with government bonds. So these are external sources. That is why this is known as non-trading asset. So non-trading asset is also included. Intangible asset is also included. Trading asset is also included. Tangible asset is also included. So here everything is included. Yes. So now it is very clear. So now in the case of net asset of the company, including goodwill and non-trading asset, are divided by number of issued share. So here value per share means here basically we are calculating the value of equity share. We are concerned about value of equity share. So how to calculate the value of equity share? Question comes. So now very easy. If you deduct all your liabilities from asset, you will get a net asset. That is asset minus liability. Very simple formula. Asset minus liability is equal to net asset. Okay. So net asset divided by number of equity share. So equity share capital will be given in the question. So you can easily find out how many shares are there. How to find out how many shares? So suppose the capital is 4 lakh. Suppose the capital equity capital is 5 lakh. Let me say. So then the face value is 100. So 5 lakh divided by 100, if you do, you will get number of equity share. Yes. So very simple now. Then what about liability? Now we discussed about asset. What about liability? Liability here is only we are concerned about external liabilities and contingent liability. Here we are concerned about external liability and contingent liability. So now my question is whether reserves and surplus is an external liability. Can you tell me whether reserves and surplus is an external liability? Anyone answer whether reserves and surplus is an external liability? Whether P&L account credit balance is an external liability? Whether equity capital is an external liability? Whether preference share capital is an external liability? Can you tell me now? Whether yes or no? Whether it is an external liability or not? Amrita is saying yes. What about others? What about others? What about others? Answer. Why you are not answering? Yes or no? You can make a guess here. At least you can answer, right? Doesn't matter if it is wrong. Yes, I want to know the answer. Whether it is external liability. Can you tell me now? Akamsha, Amrita, Anusha, Ashish, Disha, Kushal, Nishant, Omkar, Pooja, Pratish, Rajat, Shifali, Swati. Whether it is external liability. See, it is not an external liability. Answer is no. Why it is not an external liability? I will tell you. Because it is a shareholders fund. So shareholders fund means it consists of capital it consists of capital, it consists of reserve, it consists of P&L credit balance. So these are the funds which are internal in nature. So what do you mean by internal in nature? Internal means shareholders are treated as members of the company. So how you can say it is outsider or external liability? It is not possible. So these are internal fund. So what about external fund? External fund means creditor. Creditor is an external fund. 10% debenture, external fund. Why? Because those persons, debenture holders are not there in the company, because you are going to purchase the money from outsider, isn't it? Public borrowing. Debenture is one form of public borrowing, isn't it? So again, creditor is also doesn't there in he is not there in the company. So again, that is an external fund. So that is the meaning of this one. So we need to discuss the format now. Format of first method, net asset method. So how to calculate the problem, how to solve the problem? First one, statement of showing intrinsic value of equity share. That is a heading. So under that, market value of all realizable asset, including tangible asset. So tangible asset means goodwill also comes. Then you need to write the value in the outer column. Let us do two columns. Then you can write the value in the outer column. Less asset minus liability, I told. So less all liabilities including provisions for contingent liability. So deduct that from asset, you will get one amount. That amount is known as net asset available for all shareholder. Net asset available for all shareholder. Now we want net asset available to equity shareholder. How to know, how to calculate net asset available to equity shareholder? From all shareholder, deduct preference shareholder. From all shareholder, deduct amount due to preference shareholder. Why amount is given first to preference shareholder? Because preference shareholders have priority over equity shareholder. So what happens? At the timing of winding up of the company, preference share capitals are returned to preference shareholder. Preference share dividend, if there is any arrear, are returned to preference shareholder. If there is any premium, redemption premium on preference share, that is also returned to preference shareholder. So all these information, if it is given in the question, you need to deduct. See this, less amount due to preference shareholder, preference share capital minus arrears of preference dividend minus redemption premium minus final balance we are having is net asset available to equity shareholder. So this is our format. Asset minus liability, you will get net asset available to all shareholder. Then you need to deduct the preference shareholder transaction. Then you will get net asset available to equity shareholder. But here question is value per share. How to calculate value per share? Formula is this. Net asset available to all shareholder, net asset available to equity shareholder divided by number of equity share, because we are concerned about only equity share. So how to get net asset available answer? See this last answer will be your net asset available. How to get number of equity share? That I have already told. That will be given in the question. We need to find out how many number of shares are there. So this is about first method, intrinsic value method or net asset method. Any doubt regarding this first method? You can ask me now. Any doubt regarding this first method? Yes. Any doubt regarding the first method, net asset method? Have you understood net asset method? Have you understood the net asset method? Very simple. Asset minus liability minus preference shareholders transaction. You will get net asset available to equity shareholder. Then net asset available to equity shareholder divided by number of equity share. If you do, you will get value per share. Yes. So that is about this one. Have you understood net asset method now? Can you tell me? Can you answer? Comment in the chat box. Have you understood this one? Net asset method. Rajat is saying yes. What about others? Why others are not responding? You have to tell me, or else how will I know? Kusail is saying yes. Nishant is saying yes. So now After knowing the first method, now we need to discuss second method. So what is our second method? Second method is market value method. Second method is market value method. This is also known as yield method. Another name for market value method is yield method. So what is this market value method? So in the first method, net asset method, we are going to calculate only after the company is winding up. That means we have to assume that company stopped its operation. Then we are going to calculate with the help of net asset. But in the case of market value method, what happens? Here, company goes on doing its operation. So this is a concept of going concern. So what do you mean by going concern? Can you tell me now? What do you mean by going concern? This is very easy. You have to answer this one. What do you mean by going concern concept? What do you mean by going concern concept? Can you tell me the meaning of going concern concept? What is that? Going concern means what? Anyone? See, going concern means here death of the partners. Death, yes, continuity. Rajat is saying correct. Yes, continuity. Here, death, insanity, insolvencies of the partners are not affected. That means company's operation will not be affected by the death of the partner, insolvency of the partner, then any other situation. That means even if you die, company will carry on its operation. That means life of the company is forever. That is infinity life of the company. So that is one assumption, going concern. So market value method we need to calculate by the assumption that company is still doing its operation. Yes. So see this in this method, while ascertaining the value of share, it is assumed that company continues its operation. It is suitable for going concern as yield is a predominant factor. What do you mean by yield now? Can you tell me? What do you mean by yield? Yield means what? Yield means one kind of profit. See this, yield means one kind of profit. Why? I will tell you. Because in the market value method, we are not bothered about assets. We are not bothered about assets. We are not bothered about liability. We are only concerned about profit. What profit we are concerned about? We are concerned about only average annual profit AAP. That is, suppose profit for the 4 years are given, then we need to calculate the average profit. Then from that we need to deduct certain deductions. What are those deductions? Deduction, it may be of this one taxation purpose. Suppose tax rate is given 40% tax, that we need to deduct. Suppose reserve 20% is kept as reserve, that we need to deduct. Then you will get the amount available to all shareholders. From that you need to deduct preference share transaction. Then you will get amount available to equity shareholder. Then there is a concept of capitalized profit. So how to do capitalized profit? For capitalized profit, there is normal rate of return, NRR. NRR will be given in the question. That means every year at least this rate company will earn the profit. So normal rate of return will be given in the question. With the help of that, there is one formula that we need to use. Then we can find capitalized profit. After that, we can easily find the value of a share using market value method. So see this, how to do this one. This is a format of market value method. Statement showing market value of equity share. So that is the heading. First one, average annual profit, AAP. How to get average annual profit? Suppose 4-year profit is given, divided by 4. 20,000, 30,000, 20,000, 30,000. So 4-year profit is given. That is 20 plus 30, 50. Again 30 plus 20, 50. So 1 lakh. 1 lakh divided by 4 if you do, your average annual profit will be 25,000. Then appropriation from tax you need to deduct. Then appropriation from reserve you need to deduct. Then you will get profit available to all shareholder. From profit available to all shareholder, it is very simple like the previous method. Less fixed dividend payable to preference shareholder. Here only we are concerned about dividend and not capital. In the yield method, capital is not considered, only dividend payable to the preference shareholders are deducted. Finally, we get the profit available to equity shareholder. And after doing this format, you need to calculate the capitalized profit. So formula for capitalized profit is profit available. So how to get the profit available? See the format, last answer, this one. Profit available to equity shareholder divided by NRR, normal rate of return. So normal rate of return will be given in the question, that is in terms of percentage. So that you need to consider here into 100. So this is a formula. So after that you will get a capitalized profit, one answer. Then you need to calculate the value per share. How to calculate value per share? Capitalized profit divided by number of equity share into 100. So what is capitalized profit? Previous answer. See this, here you will get one answer, right? So this answer you need to write it here, then divided by number of shares into 100, you will get value per share. Yes. So this is about market value method or yield method. Any doubt regarding this one? Market value or yield method? Anything you want to ask about this one? Second method. Second method, anything you want to ask now? You can ask me. Market value or yield? Any doubt? Any doubt regarding market value or yield method? See, very simple. Market value means it is continuing process. Company still is doing its operation. Net asset means company stopped doing its operation. Very simple to differentiate. In a net asset, we are concerned about asset and liability. In market value, we are concerned about profit. Yes. So only those are the difference you need to remember. Now, under market value method, there are some sub methods are given. So that we need to see this, the valuation on the yield basis may be in the following, any one of the following forms. So one is valuation based on a rate of return. So what is this rate of return? Rate of return means, suppose if you invest in something, what rate of return you will get? Suppose if you invest, so let us take the example. You have deposited 1 lakh in FD. You have deposited 1 lakh in FD in any bank or any post office for that matter. Yes. So now rate of interest may be 6% or 7% on FD. Okay. So by the end of first year, what is the return you are going to get? That is 1 lakh plus 7,000. 1 lakh plus 7,000. So total amount you are going to get is 1 lakh 7,000. So what is your earning now? Here your earning is 7,000. Why? Because that is the extra amount you got because of the investment. So now that one we need to see. See this valuation based on rate of return. So whether there is any formula is mentioned, there is no. Yes. Under that again there are two types are there. See this valuation on yield. Under that main type is valuation based on rate of return. Under that again subtype valuation based on rate of dividend. So whenever valuation of shares are done with the help of dividend, then this is the formula. How to remember this formula? Paid up value of the share into possible rate of dividend divided by normal rate of dividend. So very clear, possible rate or expected rate of dividend is in the numerator. Possible rate or expected rate of dividend is in the numerator, and NRR or normal rate or that is fixed or standard rate in the denominator. Very simple. Possible is in the up, NRR in the down. Into paid up value. If you do, you will get the rate of earning with the help of a dividend calculation. With the help of dividend calculation, valuation based on rate of dividend. So now second subtype is valuation based on rate of earning. In this case, instead of dividend, we write earning rate. We write earning rate. See this same formula, but instead of dividend, you write rate. Paid up to value into possible earning rate divided by normal earning rate. So this is one more formula, that is rate of earning. So now we discussed about valuation based on rate of return. So now second one, valuation based on productivity factor. So under yield, main type valuation based on rate of return, valuation, second type is valuation based on productivity factor. So what do you mean by productivity factor? See this. Productivity factor represent earning power of the company in relation to the value of the asset employed in such earning. So again, asset employed means what? Asset employed means what? Can you tell me? Capital employed or asset employed means what is the formula you can give here? Here, capital employed means it is similar to the net asset. It is similar to the net asset, but here total asset minus total liability. Here, total asset minus total liability you will get what? This one, employed answer. Employed. See this asset employed answer you will get. So, average profit divided by average net worth into 100. Average profit divided by average net worth into 100, that is valuation based on productivity factor. So, as per our syllabus, these formulas are not that much important. Importance is very less because this type of questions are not asked in the examination. This type of questions are not asked in the examination, but this is important. This yield method format is important. Yield method format is important. Capitalized profit is important. Value per share is important. This you can use as alternate method. Alternate method you can use. Yes, but you need to remember the formula. Suppose if it comes for the examination. Yes. So any doubt regarding the yield method or market value method? Any doubt regarding yield method or market value? Anything you want to ask in the yield method or market value method? See, till now we have discussed out of main three methods, two methods we have discussed. So last method is fair value method. Very simple. Fair value means combination of the first two methods. Very simple. That means what? Net asset method plus market value method. And if you take the average, you will get the fair value method. Net asset plus market value divided by 2. If you do, you will get fair value method. So see this fair value method. Fair value method or fair value of a share is the average of the value obtained by net asset and yield method. So fair value formula is intrinsic value plus market value divided by 2, or you can say net asset method plus yield method divided by 2. Yes. So this is a formula, very simple. Combination of first two method. Whether this is legal fair value method, yes. Sometimes for taxation purpose and all we use fair value method. Why? Because while charging the tax, we want to know how much assets are remaining in the company and what is the profit made by the company. That is why we need to combine first two methods. Yes. So this is about fair value, and from the next class we are going to discuss about problems